Hello there, I'm Allison Caudle Abbott with Southern Lux Living, and I am here with the awesome and wonderful number guy, Sean Poole with Movement Mortgage. We're going to talk a little bit today about interest rates. I know it's kind of the conversation right now because most of the people that are in the market right now looking for a house have not seen interest rates ever like this. I can remember when I bought my first house back in 2000, I want to say rates were in the 7 and 8s then. So for those of us that are upper in age, we've seen this before, right? And I know my parents, when they bought here, their interest rate was 14% back in the 80s. So we are all just been a little spoiled, right? And we've kind of seen these rates go all the way down into the 2s and 3s and 4s, and we've kind of watched them do what they have been doing. So I want to kind of try to ease that panic a little bit. So who better to do that than somebody that's actually in the field and that I take my advice from and that I can go back and tell my clients about. So if you guys are ever looking for a lender, a wonderful lender that is fantastic with numbers, explaining situations to where you understand them, Sean Poole is absolutely your guy. So I'm going to let him take it from here, talk about what he's seeing in the market, what the rates look like, really educate you on what to do instead of freaking out and pulling away from the market. He's going to tell you why now might be a really good time to go ahead and jump in. So take it away, Sean.
Yeah, there's a few different things here with interest rates. Obviously, since the first of the year, they've gone up a good bit from what we saw in the last couple of years here. And now people are starting, every time you go to a new first number there, people start to pull back on the home buying process. If you go from buying a $500,000 house with 10% down at last month at 6%, you're really going to have to change your budget by about $50,000 when rates go to 7%, because that changes the payment that much there. But there's some things you can do because you're able to get a little bit more from the sellers now to offset that difference there. That's what we'll go into a little bit today, as well as in the jumbo market.
Yeah.
You're not seeing the 7% in the jumbo market for most people. You're actually seeing a lot of in the 5s for the interest rates too. So in this house we're in now, $1.6 million range. Someone that's putting 20 or 25% down, they could have a rate in the 5 still and not pay 7% that you're seeing on the conventional side.
And that's really important to know. So, in fact, I didn't even know that until this morning talking to Sean. So, if you're in that jumbo loan market, which a lot of our listings are right now in that jumbo loan, you're still in the 5s, which is great. So, what are you seeing with sellers doing for the buyers to help them understand that 7% or that 5% or help ease the pain of that higher interest rate?
So most cases, jumbo and non-jumbo, like the $1 million houses or the $500,000 houses, we're seeing seller concessions or builder concessions to help pay some of your closing costs there. The jumbo market's a little bit different as far as what you can do with those funds. You're looking at more of just paying your closing cost or a permanent buydown on the rate. Where in the conventional side, if you look at a $500,000 house that's more a non-jumbo range, you can use that money to do what's called a temporary buydown and take that interest rate that you're looking at a 7% rate. And there's two different ones we have right now. One's a 2-1 buydown, one's a 1-0 buydown. In the 2-1 buydown, you buy your rate down 2% the first year, so you have essentially a 5% rate the first year that you're in the mortgage. And then the second year, you have a 1% lower rate, so you're or 6% interest rate there. And in the second year, and then years 3 through 30, assuming you're in the mortgage at that point, which we are looking at, you may have a chance to refinance before you get to that year, in the year 2, then you end up not actually paying that 7% interest rate ever.
Right.
So that's a good thing right now. So you use the seller's funds. So if they give you $10,000 or $15,000 on a $500,000 house, you can use that to buy the interest rate down and really help you and get you in the best payment there for your budget, and hopefully never have to pay that 7% interest rate if we have a chance to refinance, which it looks like we probably will for the next year or two.
So if you're not in a jumbo loan, you can do a temporary buydown, right? So, but if you're in a jumbo loan, jumbo market, like we are we're in 301 Georgetown in 5 Points right now. Most everything down here sells for 1.5 to 2, $3 million, right? So this is a totally different market. What are you seeing sellers do? So that's more of a permanent buy down, is that right?
Yeah, permanent buy down. So if you looked at it, the permanent buy down will get you a little bit less for your money there. So if you look at every eighth of a percent lower in the rate, so if you go from 5.875 to 5.75, it costs about half a point, which is 0.5% of your loan amount. So it's a little bit more costly to do the permanent buy down, but it is something you could do, or you can use it to just offset your closing costs altogether, so that hopefully over the next couple of years you have a chance to refinance and not really go into a lot of money up front too on your closing cost. So using it to offset your closing costs, but also buying your rate down some will help too, so that you could buy it down to mid fives or low fives, and you may be in a good position long term where the rates go up or down from here.
Right. Okay. So, guys, another thing to keep in mind with this particular market, especially new construction, no matter where it is, right? No matter if it's in that $500,000 price point, whether it's in the $1 million+ price point, these builders that have homes that are done, remember, they purchased all of these materials at the height of the market, right? So people are saying, well, we're waiting for these prices to fall. We're waiting for these prices to fall. I don't know if you saw it. You probably did, because you are on it more than I am. But Wake County just came out with every month they come out with what their median sales price looks like, right? And we know that the number of transactions are down. We know that. But interestingly enough, last month, the price actually went up by 10 grand. The average price sold around here is up 10 grand. So when you hear the market's down, that the transaction numbers, yes, absolutely are down. What you are finding now is that sellers are willing to negotiate a little bit more, right? There's still a huge number of buyers out there. I mean, I still, to this day, believe that there's that 3 to 5 year deficit of inventory in this area. We list everything from $150,000 all the way up, and we've got buyers in every price point just waiting. They're playing this waiting game. And what I'm trying to educate them on is now might actually be the time to jump in. And the reason I say that is, guys, 5 months ago, you were doing pre-qual letters like left and right. Buyers were paying well above asking price. They were giving these crazy amounts of due diligence money, which at the end of the day, you back away from that, you lose it. Right now, we're not necessarily seeing that bidding war as much. We are seeing it some. We're not seeing the crazy high due diligence that we were. It's kind of back down to that normal range as to what it was prior. And so sellers are negotiating a little bit more. They're willing to pay down points. They're willing to give seller concessions, whether it be closing costs, whatever that is, to help bring that interest rate down for those buyers a little bit. And help buyers bring less money to the table. I was asking Sean this morning, we've been hearing with the inflation and all this stuff going on, we've been hearing, rumor has it, that rates could start to come on down second quarter, third quarter of next year. Guys, when that happens, and they project them to be in the 4s possibly, when that happens, we're going to see exactly what we saw 4 or 5 months ago. The buyers are still out there. They're either waiting for prices to come down, which we have seen over the month through Wake Gov, the prices are actually going up, or they're waiting for interest rates to come down. When that happens, there will be a buyer frenzy again. We will start seeing above asking offers coming in. We will start seeing that multiple offer situation, the higher due diligence amounts. So why not get in now when your seller is possibly willing to kick in those costs to buy your points down, whether it's in the jumbo market to where it could be a permanent buy down, or it's in that non-jumbo market where it's a temporary buy down, and then refinance in 8 to 10 months to wherever you need to be. You're not going to be paying above asking. You've got the seller willing and able to go ahead and give you some concessions. And so it's kind of really, honestly, it's really almost a good place to be right now. Those buyers out there that were doing that multiple offer and the high due diligence, it wasn't fun. I get it. It wasn't fun as an agent. It wasn't fun as a loan officer. especially when you've got appraisals coming in that don't necessarily match the sales price and you've got this big gap. So is there anything else that you think that the general public needs to know right now with this?
Yeah, you mentioned right now is a good time for buyers. One key buyer right now is the veterans that
Right.
with VA loans. So the last year or two, you've had a hard time getting offer accepted with a VA loan. Right now, you're getting those offers accepted.
Yes.
But also with the veteran, if you're buying this house $1.6 million, if you have full entitlement left on your entitlement for VA, you can buy this with no money down. So
Wow.
it's something that's really key right now. And whenever rates do come down, the VA is really good because you can do a refinance without actually verifying your income again, and it's very streamlined income refinance there, and really no cost on our side. There's no lender fees for VA loans. So right now, veterans have a true niche in the market here where they could really take advantage of their VA loan and buy a $1.6 million house or a $500,000 house with no money down. That we weren't seeing. A lot of sellers were shying away from accepting
Yeah.
offers with VA loans on them, compared to someone with cash or conventional or something like that. So that's one key buyer right now. And then also the buy downs as far as how they work. So the buying the rate down 2% and 1% or 1% for the first year there, that money actually goes into a separate escrow account. And if you refinance over the first year or two, that money doesn't just go away. So it's not like you bought the rate down for no reason like you would. Let's say you did a permanent buy down, and that money has a break-even cost because you have money that you put into it up front. It's going to take you X number of months to break even on those funds because
Right.
you're saving dollars per month to make that break even happen. With the temporary buy down, that money goes into a separate escrow account, and the mortgage company said we'll hold that money for you to pay that difference of the 2% the first year, the difference of the 1% the second year. If you refinance over the first year or two, that money's still in the account there. It just decreases your balance along on your payoff. So now your refinance is lower. So you're still getting that money from the seller.
Okay.
It doesn't go away, and it's really a good incentive for you because that money's still your money.
Okay. That's great. So just to highlight that, you guys, make sure to call your lender. And again, Sean Poole with Movement Mortgage, he's my guy. He's my top lender that I always refer out. Make sure to just talk about the different programs out there, because not knowing what is out there, that's, you're hurting yourself. So educating yourself on what is out there, the programs that are out there, the different interest rates for those programs, talk to a lender. Don't just go back in the corner and rock back and forth because you hear that interest rates are so high. Really do your homework. Education is power, especially when it comes to this real estate market here. So talk to your lenders, talk to your real estate agents. I know in particular I'll speak about Hake McCullough with Urban Building Solutions because we are in one of his houses right now here in 5 Points. Sean is the go-to lender for that, so he is available to answer any of your questions that you have. If you want to stay in that jumbo loan market, or you want to put 50% down, or whatever that looks like for you, he's going to tell you exactly what works best. Now, whether you're shopping payment, whether you're shopping what you can qualify for, he's going to have something for you. And Hank in particular, we've got 301 Georgetown, we've got 213 Georgetown right down the road. We've got 1511 in Mordecai, 1511 Cortland in Mordecai. He is willing to do those seller concessions. So whether that be in closing costs, whether that be in the rate buy down, whatever that is, he as the builder is absolutely happy to have that discussion with these buyers. So I hope today was very, very helpful for you guys. It was helpful for me. It's always great to get in front of somebody that's actually, in this every day. I can talk about kitchens and living rooms and screened-in porches all day long, but when it comes to the numbers, I always go to this guy right here. So again, Sean Poole with Movement Mortgage. What's your phone number? Say it out loud.
919-523-6435.
And I'm Allison Caudle Abbott with Southern Lux Living, 919-395-6186. Feel free to reach out for anything that you guys need, whether you have a question of the current market, any of the houses that I currently have listed or Southern Lux Living has listed. And please reach out to Sean for any lending issues, any lending questions that you have. We're both here willing to help.